colleague Nanaya visited some of the major oil marketing companies here in Accra. We've seen a reduction in the price of petrol and then an increase in the price of diesel. That's what Goil, for instance, there's been a drop in the price of petrol from the initial 12 cedis 38 pesos to 12 cedis 7 pesos. And then we've seen that same margin of reduction amongst the Total Energies we saw as well, almost the same margin of about 31 pesos reduction. And fuel, that's the petrol, saw a 31% reduction. But diesel saw a just about 31 to 32% increase in price at the pumps. So whereas petrol prices are going down 12 cedis 7 pesos per liter, diesel saw an increase by about the same margin of 31 pesos per liter. So what's happening? That's the fundamental question that we're asking right now. And Duncan Amoah, man who understands how this industry works, is the executive secretary of the Chamber of Petroleum Consumers, COPEC. Is joining us on Zoom right now. Duncan, I appreciate you as always for joining us here on Ghana Tonight. So we've seen this increase in the price of diesel by the same margin as the decrease in the price of petrol at the pumps. What's going on?
Okay, so some of the oil marketing companies did go down on prices in the second window June. As I mentioned, some had already declined to the 11 Ghana, 10 Ghana, 99 region. For those OMCs, the net effect of having international market prices go up, IMP, petrol did about $46, diesel did about some $97 a metric, LPG saw $36 a metric. If you do these numbers, of course, together with the city's relative stability over the window, then naturally all of them could have gone up. But some were already selling petrol for a bit higher than the market itself dictated. So you would see that the cost of petrol that could have probably even gone up has declined. And then diesel that, of course, went up by as much as $97 a metric has gone up across board. This is what we call cross pricing. So one product is up, one product is down. But for a majority of the OMCs, as of close of day to day, they've not done anything to prices. And that fits into our earlier demand that this is one of the windows that we would be happy to see them stay prices or give us some stability in prices. Although, like I did mention, international benchmarks had gone up. The Platts pricing formula or trademark had gone up. Fortunately for us, a lot of them seem to be doing quite the inverse, which is to say that they are not increasing and decreasing any of the components. So maybe they will stay prices. But like I indicated earlier, Goil, Total, simply now coming towards where the market, the true numbers of the market really are. They should have gone down the second window June. They didn't. That was also because there were Lacan issues that was giving them some, cost, operational costs or overheads. We understood them, but it looks as though they have used this window to correct whatever pricing inefficiencies that existed within the setup.
I see, but then again, I'm just looking at the Bloomberg terminal right now, and it appears that the fears that we had about the possible impact that this Israel-Iran conflict would have on crude oil prices on the world market has been watered down, is it not? Because we're seeing the crude oil price actually trending downwards from the almost $80 a barrel that we saw a little over 2 weeks ago to now we're looking at some $67.5, $67.05 per barrel on at least the Bloomberg terminal. That's what I'm seeing right now. So That's some good development for the impact it would have on consumer pricing, is it not? Because clearly, this crude oil price on the world market being one of the major components of the price determinants on the price build-up, at least on the price reflection at the pumps, it's a good development, isn't it?
So, Alfred, the Iran-Israel feud or tension indeed did have an impact on pricing. Like I mentioned earlier, crude prices did move from the $62 to 78, at some point $81 a barrel. Then the tensions de-escalated, and then the prices have begun cooling off. Now, as is with the crude market, anytime you see crude prices go up, the impact on the cost of finished products, which is petrol, diesel, and kerosene, is normally felt between 5 to 7 days. And so within the window, you saw a situation where crude prices had gone up, Platts prices took time to go up. And that is what I recall mentioning earlier. Petrol did see a surge in price of about $46 a metric ton. Diesel did go up by as much as $97 per ton. And then again, you had LPG also go up by as much as some $36 a ton. So these were real impacts that the Iran-Israeli conflict brought to all of us. But like I indicated, because the conflict has de-escalated at present, there's a cooling effect. And then again, there's also the conversation by the OPEC Plus basket to ramp up numbers or increase their production volumes. Once supply is going above and beyond demand, then prices will definitely slump. And that is what we are seeing. So per this, you are likely to see the second window, July, which is about 2 weeks from now, rather bring prices a bit lower. I suspect that is the reason why the Ghana Revenue Authority is also contemplating now reintroducing the 1 Ghana cedi levy that the president had requested to be suspended earlier, so that they can monitor the Iran-Israeli conflict a bit and see how it pans out.
I can appreciate your thoughts on this and the projections as well, how the next pricing window will be like. Duncan Amoah is Executive Secretary of the Chamber of Petroleum Consumers, COPEC.